All right, guys, it's time to take another look at Adamant Finance. Now, I featured them a few days ago, and it was a very popular video, but part of it might have been because the title was a little bit clickbait because it showed these amazing APYs on the Iron USD LP. And unfortunately, Iron had a exploit. We're waiting for them to give us a post soon about whether or not they're going to be able to compensate us for all the lost money in the project as they try to rebuild their project. But Adamant Finance helped me a lot avoid losing very much money from these pools because I was earning the Addy token instead of earning just the LPs. And this is kind of an idea that I've had, that when you get into these more riskier farms, if you're able to use a site like Adamant or Cub Finance where you're able to earn another token on top of the token that you're earning, you're kind of spreading out your risk in between those two platforms. Now, obviously, you need to be able to trust the platform that you're using, because otherwise you're just doubling your risk by using two platforms. But when you're on a good solid project, a good solid AMM, you're using a token that has a good setup to be able to be supported, then you end up not being hurt quite as much when something falls apart. Now, I'm not going to say that you weren't hurt if you were in Iron or Titan. You probably were hurt really bad if you were in any of the Titan farms. I do apologize for that, guys, but I didn't see that bank run, as they called it, coming, and I'm hoping there will be some kind of compensation plan for you. But it doesn't change that the Adamant Finance site was working how I wanted it to be working. It was helping me earn some additional tokens, and it has given me a way to continue to earn money off of that initial investment that went a little bit south. So let's go ahead and start with taking a look at the Adamant Finance Discord. And this is a good place to be to understand that we do have a very active development team. One person in particular, I think he may be the main dev behind this. I don't know how many other devs are in the program. I need to maybe find out if there are a few more. But he has been adding things very, very, very quickly. As you can see, yesterday he added a farm. On the 21st, he added a farm. Over here on the 20th, he responded to a rug doctor, what he called FUD. There's a rug doctor Telegram that took a look at Adamant, called it high risk. He put in why they've said that the project is high risk, and he had answers to all of those questions, explaining what they are, including the fact that some of his things that he pointed out as being wrong had already been fixed. And we do have the CertIC audit planned to be released on the 28th of this month. That is a date to watch to make sure the audit comes out and that we do hear that things are, in general, good, and the audit shows that the project has safe vaults and safe things for us to use. You will see that they did add a new one here for BNB when it got onto QuickSwap. They added that vault very quickly. You're going to be able to see over here they did have a DDoS attack on their platform, and that created a little bit of FUD for the project, but they did get a temporary site up by the time that when the attack continued for a few days, and eventually they did get moved over to Cloudflare and some better infrastructure to host their site, which was important, and I think maybe this will help avoid them having these kind of attacks in the future. You can go over here and you can see that they are just really actively talking to us about what's going on. They added Walt Finance when all Walt Finance came over to Polygon. They added Ramp and the Ramp DeFi stuff when that was over here and being added. And so they've just been a very active team adding more and more things. And why is that important? Because the whole Adamant token and the Adamant platform is built around the idea that we're going to build up our TVL. We're going to be able to take those 30% fees to be able to go ahead and be minting more Addy to be sending out into the pools. And we're going to be able to be taking some of those fees and redistributing you, making it very beneficial for you to be holding the token, which helps support the price of the token. Because when you have a token that is receiving dividends out to it, how much those dividends are and how quickly we are getting them really helps to drive the price of that token. Because if you're getting an ROI on the token very quickly, then it makes sense to go ahead and buy the token. And that's something we're going to be talking about a little bit today, but there is some extra risk here because they have added in the ellipsis idea that you're going to be penalized for removing your tokens early, and there are even ways that you can have to lock your tokens to get maximum rewards where you won't be able to touch them for 90 days. That does mean that if the token goes up or down really violently within those 90 days, you might not be able to escape or take advantage of a big run up because your tokens are currently locked. Now, they do have a very aggressive rewards program if you lock your tokens currently, so I think most of us would think that that is worth it. but we'll go over that a little bit as we look a little bit more at this platform. So first, I just wanted to kind of show you, as you can see, if the platform's big enough, you can go ahead and sort by it. One of the big ones I added recently was ape swaps. You can see now you can get into all these different ape swap pools, and you can earn LPs in the 200% if you go for some of the safer stuff like an ETH-matic pool, or you can try your luck at one of the ones in the 2,600 if you're willing to go ahead and get into a banana token. Now, we do know that all of these tokens are kind of risky because we don't know if the banana token is going to be able to hold a good value, but this is where earning an APY in about around 900% from the Addy token is kind of advantageous to you, because you're not going to be just getting more banana tokens and more banana LP with the Matic. You're also going to be getting this Addy token. So if the banana token doesn't hold its peg that well, if the Adamant token can, or if it can earn you dividends to help cancel out that token dropping, then you might still be profitable, or even more profitable if you get into one of these farms. Now, obviously, if I'm wrong and the banana token goes to the moon, well, then you should have just been regularly compounding the banana token on the ape swap, but that's something each of us will have to decide, and you're going to have to play your own risk profile. I like the idea of Adamant Finance. I think it's a pretty good copy of the Pancake Bunny site, where they protected themselves from flash loans. They've added in a staking utility that makes it really beneficial for you to lock your Addy as opposed to just staking it, and it's helped hold the value of the token and continue the project growing and surviving, even when one of its biggest projects on it in Iron Finance fell apart and they lost $100 million worth of TVL and went from over 300 million to under 200 million. They bounced right back up over 265 million, because I think a lot of the people on the site realized that being here and earning Addy tokens are the reasons we didn't get completely wrecked when Iron fell apart. Because even though my Iron USD pairing here that was growing and making a lot of money, the fact that it farmed me a lot of Addy tokens meant that when I got out of it, and I was able to get out of it a little bit before it went terrible, but I still lost money because I sold my Iron tokens off at about 80 cents on the dollar, so I had like a 20% loss on that pairing. My Addy that I earned covered that 20%, assuming that the Addy token doesn't fall apart, because those tokens are vested, and I'm going to let them vest the 90 days because I do believe in these projects. And in the meantime, I am getting paid out some Matic tokens every day for those tokens. So overall, I'm pretty much happy with that. Now we're going to go ahead and this is just, a quick idea of when a new site drops. You're going to see really the most aggressive APYs as in the risky tokens, and then you have really healthy APYs and tokens that I would say are much safer to pair. Now, obviously, the crypto place is a volatile marketplace. BNB and Matic have been moving up and down like crazy, but if you're somebody who is in crypto in a while, if you feel comfortable holding any of these tokens, you can go ahead and check out this site, because you'll be able to check out the ability to stake what some people would say are premium tokens and earn really good APYs compared to staking them alone on the other sites. We'll look at a couple of the other ones. This was the Omen. They added this Omen one, which has a 16,000%. I haven't actually looked into this. It's a really, really high one, so we'll have to see if maybe there's some Ponzi-nomics here or something going on. They added Walt. Walt is a pretty exciting site. Their APYs are a little bit lower on some of their tokens, but they do have some opportunities here if you want to get into the riskier stuff that is very, very high. This is a platform that has quite a lot that you can get into. Polydoge is kind of a funny one, but they have the new curve pool. If you're someone who just wants something really, really safe but getting a little bit more, then this is one that you can look into. They added the QDAO, which is basically another kind of stable coin that's being issued. They have the Polyzap token. And then if I go to all vaults, I can show you that one of the ones that I got into is the RUSD, which is the ramp stable coin that they recently issued, and then the wrapped ETH one. Now, so far, this hasn't been the best one to get into because ETH took a big dump on me, but we'll see where I go. Again, I didn't invest too much money. Overall, I'm not really down very much in these pools because of what I've been earning in them. And now we're going to take a look at the staking investing Addy so that I can make sure that you understand how that works if you want to go ahead and get into that. Hopefully it loads. Would be a terrible time to have a problem with the site. There we go. Just had to refresh. So it's because I'm not actually connected to the site. That's why I had a little bit of a hiccup. So as you can see, we're back at $50. And the next part of this is I'm going to be taking a look at the token price and kind of showing you that it's been in an uptrend while it has been moving pretty up and down pretty violently, but it's still kind of in an uptrend, so that's something pretty exciting. So when you earn Addy tokens in the pools, you're gonna have to claim invest your tokens, and that moves them over to the staking pool. You need to be doing that about once per day to get the APY that they're showing. If you have a big enough stack in there to financially think that you should be claiming investing twice a day, then you can do that, and your APY would actually then be slightly higher than what Addy is advertising, because they are saying to get your full APY, you have to come claim your Addy, invest it, so that it comes into the vesting pool and starts to earn the staking rewards, because vesting Addy is there for 90 days and it earns these staking rewards. So it earns a 218% APR in Matic, and those will get paid out to you here. So let me actually I'll actually log in. Let me just I have to switch to my Polygon site. Oops, wrong account. There we go. Let me connect, and I'll go ahead and show you a little bit here how this ends up working. Let me do one more refresh. There we go. So as you can see, I've earned a whole 9.7 Addy tokens, and this is mostly from the Adamant Finance staking I was doing. And then these rewards here are the 4 Matic that I've earned about in a day, and 0.7 Addy for having a few Addy that I bought and locked that are over here, and my vesting Addy that are sitting over here. So these 9.7 are earning these Matic rewards, and these 2.9 are earning these really high Matic and a Addy rewards. As you can see, this is an APR of over 1,000%, and so your APY on this would be pretty high. Now it doesn't show an APY because there is no auto compounding of these rewards. I have to claim these tokens, and if I wanted to get some super high APY, I'd have to sell off the Matic for Addy and then come lock the Addy into here, so that it then started earning even more of this 700%. But these rewards here, when you claim them, you can do whatever you want with them. So that's one of the nice things. So even though your Addy that you earned is initially locked for 90 days, it starts earning you liquid Matic rewards that you can go out and do whatever you want with on the marketplace, whether it's reinvest more into the pools that you're in, or just hold, or go ahead and sell for more Addy tokens if you want to do that compounding kind of building. And so this is a pretty exciting opportunity for people. If you get a decent amount of Addy built up in here, you're going to be earning a pretty good amount of daily rewards from the fees that they are generating. And as long as their TVL continues to grow, you're going to keep earning more and more rewards. Okay, let's go over the token value and kind of get an idea of where the token has been and where it's going, hopefully. And then we're going to end the video there, and hopefully you come and take a look at Adamant if you're on the Polygon network. Now, obviously, everything has been down recently. It's Tuesday right now. It's Wednesday right now, and I'm making the video where things have started to turn around and go back up. And as you can see, the Addy token has gone, in general, over the last 1 month from around $25 to a peak of $70, and is now sitting at $50. Now, one of the things that you'll kind of see here that's kind of nice when you look at this is there is a trend line that is going up just about like here, and just barely this low here of 42 has not been reached. If this is the new low and we turn around, and we have started a turnaround of $50, then we're going to continue to have a pattern of higher highs and higher lows. So higher highs and higher lows typically means that we're going to be heading back up and probably be touching somewhere around $80 or $90. If you look at each time, it touched 55. Then the next high, it touched 56. It did this, as you can see here, did a higher low, shot back up to 66, did a slightly higher low, shot up to 77, slightly higher low. So now we should hopefully shoot up to, I don't know, maybe like 85 or something if the pattern were to hold. But we'll have to see. If it can just hold this $50 range for a while and maybe consolidate around here and turn that into a real level of support going forward, as it did, it didn't exactly serve as resistance here, but it like 56 kind of did. So if it can turn 50 into support, then maybe eventually here in the near future we can head back up. That's what I'll be looking for. In general, let me know what you think about Adamant Finance. Let me know if you think it does help you or the problems that you might see with it. I do understand that anytime you're earning a token that goes into a staking pool that you can't actually claim for 90 days, unless you're willing to give up 50% of that reward, does seem a little gamified, maybe seems a little bit strange. It's just something you have to understand, that it really gets you into the idea that you need to be invested in the platform and plan to stick around on the platform for a while. Now, that doesn't mean that you have to stay in any one pool. As you can see, they have added just a ton of vaults. You can get into brand new sites. You can still speculate. You can chase the newest stuff, the funniest stuff out there. You can end up on quite a lot of places the way that they're adding things. But in the end, you'll be continually supporting the Addy token, building up a stack of the Addy token, and then once 90 days have passed, you'll have a weekly unlock of Addy tokens that you can then sell, move into a staking pool, move into something else, do whatever you want with them, move into the locked pool if you're really committed to staying here and being, really committed to the site. These are all the kind of things that I see with this site, and as long as the Certec audit hits on time, the dev keeps on adding different projects, I see this really growing to be one of the bigger projects on the Polygon network, because it's really, really, really exciting to see these staking rewards of 900% APR, and they're able to do that because they've got this $260 million staked in here that they're taking that 30% of the staking fees and then paying it out to the Addy. I mean, even if you were just holding your Addy in the staking pool and earning 281% APR paid out to you in Matic, that is pretty attractive to anyone. And that is if you don't lock it. So if you buy it now and stake it, you're earning that. And if you buy it and lock it, then you're earning this 900% APR. But you have to be saying that you're going to lock that investment up for at least 90 days. Now, anywhere else in the world where you could make an investment, lock it up, and earn a 900% APR for 90 days, we'd probably take. But obviously, that we all know in crypto that we don't know where the Addy token is going to be in 90 days. We also don't know where the platform is going to be in 90 days. So make sure you protect yourself. If you get into this, make sure you understand what you're doing, and make sure that you go join the Discord, you ask questions, you get comfortable with the project, because I'm not a financial advisor and you need to do your own research for all of these types of things. Thanks everybody for checking out the video. Goodbye.